The $32 billion premium. Alphabet just finalized a $32 billion all-cash payout for Wiz, nearly $10 billion more than the offer Wiz rejected back in 2024. While the press release focuses on integrated threat detection, the finance team is staring at a 32 times revenue multiple that makes even the most aggressive SaaS valuations look conservative. This was not a move of strength, but a calculated overpayment to fix a specific failure in Google Cloud's enterprise sales cycle. For years, Google struggled to convince Fortune 500 CISOs that its security was more than just a consumer-grade layer. By swallowing the fastest-growing cloud security company on record, Google is effectively buying the trust it could not build natively. This aggressive premium highlights how desperate the search giant is to protect its cloud growth as it chases Azure. The real pressure now shifts to how Alphabet justifies this drain on its cash reserves in the next earnings cycle. The multi-cloud tax strategy. Google is no longer just selling compute and storage. It is now collecting a security tax from customers using Amazon Web Services and Microsoft Azure. Wiz currently protects nearly half of the Fortune 100, and crucially, most of those workloads are not running on Google Cloud Platform. This acquisition gives Alphabet deep visibility into the infrastructure health and spending patterns of its primary competitors. Think of it as a strategic Trojan horse that allows Google to plant its flag inside the server rooms of its rivals. Instead of fighting for every marginal cloud migration, Alphabet is positioning itself as the mandatory security gatekeeper for the entire industry. This move changes the competitive landscape from a feature war to a structural one. Owning the security layer means Google can dictate terms to enterprises that have no intention of leaving the Amazon ecosystem, creating a recurring revenue stream that bypasses the infrastructure race entirely, the AI infrastructure trap. The timing of this close matches exactly with the massive enterprise shift toward private AI model hosting. As companies move their proprietary data into cloud environments to train large language models, the surface area for catastrophic leaks has expanded exponentially. Google Cloud CEO Thomas Kurian is betting that security is the only lever left to pull against Microsoft's head start in AI productivity. By integrating Wiz directly into the Vertex AI stack, Google is building a vertical silo where data safety is the primary selling point rather than model performance. However, there is a significant risk that the neutral multi-cloud appeal of Wiz will erode under Alphabet's ownership. If AWS and Azure customers feel that their security telemetry is being used to feed Google's competitive intelligence, they will churn. Alphabet has to walk a thin line between being a neutral security provider and a cloud competitor. And any misstep here will evaporate that $32 billion valuation. The signal under the noise. The Alphabet-Wiz deal is the ultimate admission that infrastructure has become a commodity, and security is the new moat. By paying a 39% premium over the 2024 bid, Google has signaled that it can no longer rely on organic innovation to catch the market leaders. This acquisition transforms Google Cloud from a distant third-place player into the primary landlord of the enterprise security layer. The financial success of this move will not be measured in simple cloud growth percentages, but in Alphabet's ability to cross-sell high-margin security services to the vast majority of companies that still prefer AWS for their core compute. The real test begins now as the integration phase attempts to merge Wiz's fast-moving startup culture with Google's bureaucratic oversight. If they can maintain Wiz neutrality, Google successfully taxes its competitors. If they fold it too deeply into the GCP stack, they just spent $32 billion on a very expensive internal tool. Watch the Q3 segment reporting for the first breakout of security services revenue to see if the cross-cloud strategy is actually taking hold. Subscribe for more.